This is the Asia Trade. I'm Paul Allen in Sydney, where the markets just opened. The top stories this hour. Asian stocks set to open lower after another downbeat day on Wall Street following the Fed's hawkish pivot. US Treasuries under pressure, the yield curve now at its steepest since 2022. US President-elect Donald Trump backs a House Republican plan to avoid a government shutdown and suspend the federal debt limit for 2 years. And we're live in Macau as Chinese President Xi Jinping is in the city to mark the 25th anniversary of the territory's handover to China. All right, we're up and running for the final trading day of the week here in Sydney. In the early going, we've got the ASX just a little bit weaker, off about 0.1%. It is, of course, a staggered open here. We'll be closely watching Wesfarmers, of course, starting with a W. Might not get going until another 10 minutes or so, but we've just had the news that Wesfarmers will sell core gas to Nippon Sanso unit for 770 million Australian dollars. Elsewhere, we're looking at a slight gain for Nikkei futures, better by almost 0.1%. The Nikkei was one of the better performing markets on Thursday after that Fed-inspired sell-off. It was only off about 0.7%. But take a look at the yen. 157.46 now. We're hovering around 5 months lows, so this is around the stage where we might expect to start hearing some intervention chatter. We've also got the offshore yuan very weak against a surging greenback. We will have the 1 and 5 year loan prime rates out of China today. They're not expected to change, though, likely to be on hold at 3.1 and 3.6% respectively. Let's take a look at US futures. We did see US assets start the day rebounding, but then they gave up gains and finished lower. Futures at the moment tracking a little bit higher. We did, of course, have stronger than expected third quarter GDP numbers out of the US. But of course, a stronger economy, it means the chances of more easing from the Fed receding. Talking of receding, take a look at the crude price there. That's slipped again, a function of a much stronger US dollar. China's biggest oil refiner also says gasoline demand in China has likely peaked, so concerns there lingering that the oil market might be headed into oversupply. Well, let's get to one of our top stories. US President-elect Donald Trump and House Republicans have reached a deal to avoid a government shutdown and suspend the federal debt limit for 2 years. Bloomberg's Kayleigh Lyons is in Washington and joins us now. So, Kayleigh, what is in this deal? What's changed now that makes it acceptable to the incoming Trump administration?
Well, Paul, this is a much slimmer package. The Plan A that was revealed by the House Speaker earlier this week was a piece of legislation that was more than 1,500 pages long. This new Plan B is only 116 pages, so that gives you a sense of how much has come out of this bill, including extra measures that had been added in the first go-around. Things like changing language around pharmacy benefit managers or moving a stadium under the control of the authorities here in Washington, D.C., things like that. But what is still included is a stopgap measure that will keep the government funded for 3 months, so into March, as well as more than $100 billion in disaster relief for the storms that the Southeast experienced over this hurricane season. So direct disaster relief as well as economic aid to farmers. It does seem that the president-elect is much happier with this deal. He said it was a success here in Washington. He calls it a good deal for the American people, and this will come to a vote on the House floor. We're expecting possibly within the hour. The thing is, though, that it will come to the floor under what is called suspension of the rules. So that means to actually pass through the House, it needs to require 2/3 of the majority of votes, and it is not clear whether or not it can get there. In fact, it very likely will not. It would require a lot of Democrats to sign onto this, and the Democratic leader in the House, Hakeem Jeffries, has called this package laughable. He just gave an impassioned speech on the House floor as to why Democrats will be voting against this. So it could very well go down on the floor in the first try. It would then have to go through what's called the rules procedure, go through the rules committee. They will essentially set a rule which governs how it can come back to the floor. And when it does so, it will only need to pass with a regular majority. So that's how it could potentially clear the chamber. But of course, the House is in Republican control. The Senate, where it would go next, is in Democratic control. And it's not clear that Senate Democrats will be willing to vote for this, as they were not part of the negotiations on this deal.
Yeah, time running out. Can a shutdown be avoided?
It's going to be very tricky to avoid one at this point, Paul. It's not out entirely of the realm of possibility. The deadline, of course, is midnight Friday Eastern time. And so it will have to very quickly move through the House and through the Senate, assuming that no one senator, which holds a great deal of power, decides to hold up the proceeding. So it is still entirely possible that a shutdown is avoided. But at this point, it is looking incredibly tricky to do so. The one possible saving grace here is that because it is a Friday night deadline, it would be a technical shutdown that would begin over the weekend, but because of it being a weekend, it wouldn't necessarily be felt in terms of the effect for several days. And it's, of course, not clear how long any kind of shutdown would last if one indeed begins, although Donald Trump, as well as Elon Musk, who was advocating for the first bill to go down, have said that a shutdown could be necessary if they do not get what they want here. So at this point, we're all just checking our watches and seeing if they can pull this one out.
In the lead up to negotiating this slimmed down bill, also another interesting idea from incoming President Trump about abandoning the debt ceiling. Now, this is something that a lot of Democrats support as well, and it would certainly eliminate this fairly regular game of chicken that we have. But what are the risks here?
Well, certainly Democrats will tell you that Donald Trump wants to see this done because he wants to be able to cut taxes substantially next year, as we know he is planning to do. What this package includes is not an abolishment of the debt ceiling. It doesn't get rid of it entirely, but it does lift it for 2 years, which would, in theory, provide plenty of leeway for him to get that tax package and other measures he wants to see done through budget reconciliation through this Congress. Well, there will be a Republican majority in both chambers. Democrats may not like it as much this time around, given the way in which this could be being forced through Congress to avert a shutdown, but it does kind of open the door to what could be an easier time in the 119th Congress, which begins in January, of dealing with all these legislative priorities, not having to raise the debt ceiling next year when they're also going to have to deal with funding once this continuing resolution expires, border and immigration and energy measures, as well as tax measures Donald Trump would like to put through. All of that makes the kind of legislative calendar a little bit easier. The other thing we have to consider, though, is as this legislating is being done, who's going to be leading that effort in Congress? Because of all this drama around keeping the government open this week, there is renewed concern over the future of House Speaker Mike Johnson, as a number of Republicans have already suggested they may not be willing to vote for him when he stands for election as Speaker again when the 119th Congress begins on January 3rd.
All right, Bloomberg's Kaylee Lyons in Washington. We're shaping up to be a late night. Well, let's bring in Vishal, Khanduja, head of broad markets fixed income at Morgan Stanley IM. Vishal, thanks so much for joining us. I'd like to start there with that idea of abolishing the debt ceiling. And we've got a chart that indicates the latest US Treasury auction. It saw some pretty soft demand. We've got the yield curve at its steepest since 2022. Now, this idea of getting rid of the debt ceiling, it's an idea that a lot of Democrats also embrace. But my question is, how much US debt can the market soak up?
Morning, Paul. I think that is the highest conviction bet that we have in our portfolios at the moment as well, that we are underweight the long end of the Treasury curve, and then the steepening that you're seeing, whether it's 2 going up to that 27, or the 530 is also steepening pretty significantly today. I think apart from just being able to entice global investors who need to show up at auctions, and we saw a pretty dismal one today from the 5-year TIPS auction here. The performance was going back, we had to go back to 2008 to see that kind of, the significant 7 basis points of tail, as we call it, in that auction. I think apart from that higher yields, coming back to the main point, you need to have a very clear and understandable as well as sustainable fiscal plan, which is where I think this new administration will be clearly tasked with right away in the first half of their administration as they take office after January 6th here. So I think that is where the market is getting a little bit nervous. That is where you will see the volatility. Steepening is one outcome from it as well. So I think that will be a very clear indicator for this administration to keep focused on, which is the 20 and the 30-year part of the yield curve.
Are you concerned at all about rising debt, widening deficits, and overall the soaring interest bill in the US? At what point does this reach the need for some actual action?
I think right away in the first half, I think there is quite a bit, about 30, 35% of approximate treasuries have to be refinanced in the next few years, because I think what had happened over the last year and a half in the US, I think the average maturity of that debt is getting shorter and shorter. So a lot of the debt was issued in T-bills in the very front end, which is not what a developed country with a reserve currency like the US should be long-term doing for a sustainable sort of balance sheet. Very clearly, I think Chairman Powell also pointed that out. I think not only in the third, fourth quarter of 23, but then quite a bit in his Q&A throughout 2024 as well. So I think that part needs to be corrected. And that's where I think the refinanceability issue will show up in 2025. So I think, yes, we constantly have been focused on the corporate and the consumer balance sheets having the need to refinance their debt. We actually strongly believe that that is not the balance sheet to worry about in 2025. The balance sheet to worry about refinanceability issues with is the U.S. Treasury on the other end. So I think that is where our focus has been. That is where the underweight positioning comes from and the highest conviction that we have in that trade at the moment.
Well, let's talk a little bit about Fed policy for 2025, because we've got another piece of interesting data today. It was the third quarter GDP numbers out of the US showing the economy growing faster than expected. Now, this new set of dots from the Fed yesterday about potentially just 2 rate cuts in 2025, it really opened the door to a conversation about there being perhaps 0 rate cuts in 2025. Is this data the first nail in the coffin for those rate cuts? I mean, when the economy's strong, jobs are strong, and inflation isn't tamed, why ease?
Yeah, no, I think a lot of that jobs weakness that we had seen, the 50 basis point cut that came first from the Federal Reserve, was part of that one piece of the mandate, or one of the mandates out of the 2, which is the full employment, was getting threatened because of the restrictive policy that they were at close to 550. I think the 100 basis points of easing from that ultra restrictive policy is definitely showing up in the economy, whether the labor market has eased up, as well as then the growth or the U.S. exuberance or the exceptionalism that you're seeing. So definitely, I think the Fed has done a fantastic job over the last probably not only just 1 year, but also over the last 4 years post-COVID to guide the market very clearly, very data dependent, and that's what they're doing as well. And now that I think the dual mandate comes to be met again, even though we still see some lingering weakness in the labor market, it's not as strong as the middle of 2024 that we had seen the strength in. You can look at the private payroll is sub 100 on an average, moving average, if you will. So I think if you come back to 2025, what is our outlook? I think yesterday's meeting was just probably a cut less than what the market was expecting. We actually believe this is not a pivot. This is a prudent pause that they're going through. So they are data dependent. And then very clearly, they're going to be very policy dependent as well in 2025. Again, put all of this into a model, and what is our outcome from this for 2025? We think that probably 2 to 3 cuts, Fed could over-deliver in terms of what the market is pricing in. And that's where you're seeing in the front end, the bid came back today. I think 2-year yields are lower on the day, and 30-year yields are higher, the steepening coming back. So I think the front end becomes very attractive to us at this point, and much more higher conviction in that 0 to 5 year, 0 to 10 year intermediate part of the Treasury curve versus the long end that we have. So 2 to 3 cuts, Fed could over deliver, a lot of data and policy dependence, and that will bring in a lot of volatility. 25.
Yeah, a lot of unknowns, though, heading into 2025, right? Particularly around inflation. What risks do you see of inflation potentially making a comeback?
Definitely the pace of decline that we had seen over the last 18 months in inflation in the U.S. is not going to be repeated in 25. So that is like the premise that we're going into 25. It's going to be stubborn. It's going to be bumpy to bring it down. But I think on the other side, the market is over exuberant in terms of the new administration and all the pro-cyclical policies that they might come out with, and all of that getting effectuated into pro-growth and pro-inflation. I think we don't think that kind of optimism is warranted at this point. So we do think that all these policies that are intended, or at least are talked about during the campaign time, are going to have some negative growth effects as well. Some of them might be actually negative growth, positive inflation on the other side. So I think a lot of that remains to be seen. Again, the unknown unknowns that we are, or the known unknowns that we are sitting on. So a lot of policy dependence. We do think that this is going to be still a tough one for the new administration, given the amount of deficits that we are sitting on. This is not like the first time, if I can say, like the Trump 1.0 administration, that the deficits were lower, and a lot of it could be achieved through a lot of debt. It's going to be unachievable that way, given the 20 and 30-year part of the curve will be clear markers for the administration. So we do think that yields are attractive around this higher than 450 level on the 10-year.
Vishal, before we let you go, what areas of the bond market look most appealing to you at the moment? One of our guests yesterday was favouring municipal bonds. What do you like?
So I think we look at the world in fundamentals, technicals, valuation. Those are the three pillars of all our process that we look at all the sectors with. Two stick out to us. One is, fundamentals on corporate and consumer balance sheets are strong. So securitized sector sticks out to us, both agency as well as non-agency. These are residential bonds backed by borrowers who are very strong in their balance sheets, have a job, can make their mortgage payments. Mortgage payments are fixed for 30 years. And then the house prices have increased by about 20 to 30% over the last 3 to 5 years here in the US. So that is one part of the balance sheet or sector we like. And then the other one is the below investment grade, which is bank loans, senior part of the capital structure, floating rate coupons that you get. And I think those companies are also doing fantastically well and performing well fundamentally. So I think those are the two that stick out to us at the moment. And that's what the overweights are in the portfolio.
All right. Vishal Khanduja, head of broad markets fixed income at Morgan Stanley IM. Thanks so much for joining us. Let's just check in on a couple of stocks that we're tracking. One of them, Nike. We have had CEO Elliott Hill with his first earnings call. He's talking about refocusing on sports, meaning ties with small retail partners. Overall, we saw a decline in revenue in the current quarter. Nike's recent report, though, suggests performance might be stabilizing. So we're seeing some modest gains there for Nike after hours. FedEx, though, a big pop there, up 8.7% after hours. The announcement there that it plans to spin off its $30 billion freight unit into a separate division. The intention is that would happen within the next 18 months. Let's check in on one of the stocks here in Australia as well. Wesfarmers, starting with a W, right near the tail end of the staggered open here in Australia. It's off by 1.2% at the moment. We had the news just before the open that Wesfarmers plans to sell Coregas to Nippon Sanson unit for 770 million Australian dollars. That is subject to completion adjustments. The plan is to complete that sale by the middle of next year. Wesfarmers shares, though, off by about 1.25%. We have more ahead on the Asia trade. This is Bloomberg. U.S. Secretary of State Antony Blinken says Washington is receiving positive signs from the rebel group that swept Bashar al-Assad from power in Syria. He tells Bloomberg the U.S. is considering sending officials to the country to help aid in a smooth political transition.
We're looking at all the authorities we have. We're looking at all of the sanctions, not only our own. The United Nations has sanctions on HTS, its leader. And I think what we need to see is actual concrete steps, building an inclusive, non-sectarian government, a transition, eventually getting to an election. As we see these steps taken, then I think we'll be able to respond. Others will be able to respond. That's what we'd like to do. But we need to see concrete action, not simply positive declarations.
The EU's chief diplomat has said she's sending a senior representative to Damascus to talk to this new group, talk to this government. Is that something that you would want to do, that you can do, indeed, given the terrorist designation and the sanctions that are in place?
We've actually been in direct contact with HTS.
On the ground?
I can just tell you we've been in direct contact, and we're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days.
Pull back and ask you another question about the region, and there's been a lot of speculation that a ceasefire deal could come together. When President Biden spoke about the deal between Israel and Hezbollah, he was asked at the end, do you think you could get a ceasefire deal by the end of your tenure? He said he's hoping and praying. Is there anything that's happened that gives more grounds for hope and prayer going forward here?
There is, and the reality is we should logically be able to get this. And I say that with all the caution that comes with that statement, because, you know, we've been very close before, and we've had these Lucy in the football moments where you're just ready to kick the football and Lucy pulls it away. But what's changed is this. Hamas knows that the cavalry is not coming to the rescue. For months and months and months, it hoped it would get a wider war with Hezbollah, with Iran, with Iranian-aligned groups coming in and creating more problems from Israel on more fronts and helping Hamas endure. We now know that's not happening. They know it's not happening because of the very important work that was done with us and with others, dealing with the unprecedented Iranian attacks on Israel, dealing with Hezbollah. So I think that's concentrated minds among Hamas on the need to complete this deal. Having said that, you know, it's always incredibly fraught, and it's very hard to get decisions made. It's hard to communicate. And for all of those reasons, even as close as it is, you know, it can still move in the other direction. But we've all been fanning out, working with all of the different partners who can make a difference and who may have some leverage with, communications with Hamas, whether it's Qatar, whether it's Egypt, whether it's Turkey, where I was just last week. The fundamental question right now is Hamas finally prepared to say yes? And if it does, we get the hostages back. We get a ceasefire.
U.S. Secretary of State Antony Blinken there speaking with Bloomberg's David Gura. Other political stories that we're following. Bloomberg has learned that Canadian Prime Minister Justin Trudeau will shuffle his cabinet on Friday, and it comes after the surprise resignation of his former finance minister, Chrystia Freeland, earlier this week. A government official says Dominic LeBlanc, who was sworn in as finance minister after Freeland quit, will remain in the role. Philippine Vice President Sara Duterte is facing a third impeachment complaint, this time from a group which includes clergy members and lawyers who allege she violated the Constitution and betrayed public trust. Duterte faces separate impeachment moves and an investigation over her apparent threat against President Ferdinand Marcos Jr. Argentina is seeking a new program with the International Monetary Fund to replace its current $44 billion deal. The IMF had earlier lauded President Javier Milei's government for cutting spending and cooling inflation. If an agreement is reached, it would mark Argentina's 23rd program with the IMF since 1958. Coming up later on the show, we'll be live in Macau as Chinese President Xi Jinping marks the 25th anniversary of the territory's handover to China. This is Bloomberg. Let's take a look at some of the FX moves today. The yuan, the yen, very weak at the moment, 157.50. We're on intervention watch again. It's all about that strong dollar. We've got the offshore yuan, meanwhile, at 731.22. The record low for the yuan, by the way, 737.49. The euro right now just above 103. More ahead on the Asia trade. This is Bloomberg. Getting some breaking news out of Japan. It is CPI numbers for the month of November. Modest beat ex-fresh food rising 2.7%. The expectation was for a 2.6% rise, but that headline number for CPI bang in line with estimates, a 2.9% rise, an acceleration from the 2.3% that we saw back in October. Of course, this comes on the heels of the Bank of Japan remaining on hold yesterday, and some remarks from the BOJ also yesterday that it does expect CPI to continue increasing gradually. That seems to be borne out by these numbers today. So ticking up there 2.9% as expected. We have had energy subsidies rolling off in this period as well. The yen, meanwhile, very weak, 157.59. Well, our Japan stock reporter, Alice French, joins us now for a close closer look at these numbers. Let's start with those CPI numbers. Bang in line. What are the dynamics at play here, Alice?
Yeah, morning, Paul. So obviously we saw the BOJ yesterday deciding not to hike rates in their final meeting of the year. These CPI numbers, though, they will be supportive, and I'm sure that they'll be interpreted by the market as supportive of a future rate hike, or even multiple hikes next year. Governor Ueda last night was, I think one thing we can take away from his press conference is that the situation is very complicated. So inflation and also wage growth will be closely watched by the BOJ. I can imagine that the market will see this as being positive towards future hikes.
Yeah, in terms of this year more broadly, what's the impact of the BOJ decisions had on the market so far this year?
Yeah, well, it's interesting because usually we would expect that such hikes would have a negative impact on stocks, right? Higher borrowing costs usually do pressure companies' earnings. But actually, in 2024 overall, we've seen these actually being positive, these hikes for the market. Financial stocks have really gained a lot. We've seen insurers rising over 50% this year and banks up over 40%. And that's really driven the whole Topix and Nikkei higher. The Nikkei and the Topix are both up over 15% this year, beating several other markets across Asia. So this kind of gradual normalization of the BOJ's monetary policy does seem to be being positive for Japan. And we're seeing a lot of investors feeling quite optimistic about the impact that it might have into next year, particularly if we do see further hikes as expected.
Yeah, so as you mentioned, it's been a good year for the Nikkei. I think it's up a little bit more than 17%. What are the factors that could propel this rally higher, longer? I mean, we do have a very weak yen here to consider as well.
Yeah, absolutely. And, the weak yen this year has been historically low. We've seen it fall to over 3-decade lows in 2024, and that has been very supportive for exporters. Car makers and tech have seen benefits from that, and that will likely continue if the currency keeps weakening. In terms of other positives, we've seen a lot of activism. We've seen a lot of activist investors in the market this year. And that's really driven a lot of individual stock gains. And it's kind of boosting optimism amongst investors, particularly foreign investors, about Japan overall as we see companies moving towards more capital efficiency. We know the TSE and also the government are really pushing on corporate reforms. And as that continues, we are seeing a lot of optimism for even further gains potentially in 2025 as that trend continues.
All right, our Japan stock reporter Alice French there. Well, Chinese President Xi Jinping is in Macau to mark the 25th anniversary of the territory's handover to China. He's set to attend the inauguration ceremony of the city's new administration. And our China correspondent Min Min Lo joins us now from Macau. So, Min Min, what's the mood on the ground there?
Hey, it's a very chilly morning here in Macau, and that didn't stop some residents coming 2 hours early ahead of that flag-raising ceremony, which is happening right now. And I met residents who came all the way from Shenzhen, from Guangdong province, just to witness this momentous event, the 25th anniversary of the handover of the city back to mainland China. And security is also very tight, heavy police presence here. We were earlier asked to move away from the Lotus Square where the flag-raising ceremony is happening, which is why we can't show you a scene of what's happening right there, right now. But this is President Xi's third trip to Macau as president. He was last here in 2019. At the time, a lot of the focus was on some of the political instability that was happening in the neighboring city of Hong Kong with the anti-Beijing protests there. And so one of President Xi's first public remarks after landing here in Macau is to laud what he calls the universally recognized success of this one country, two systems model with Macau characteristics. And he called Macau this pearl on the palm of the motherland, really praising how stable the city is and the development of the city. And we expect that to be the theme of a speech that he is planning to give later this morning as well.
What's the state of Macau's economy at the moment? Because, of course, it's so dependent, isn't it, on tourism and casino income?
It is, and in some ways, Macau is still emerging from the shadows of the pandemic because, as you said, it's incredibly reliant on the casino sector, which contributes to about over 80% of the tax revenue of this region. And with the broader economy in mainland China being still quite weak, that means that mainland tourists that are coming here are not willing to spend as much as before, and that's what local businesses, residents have been telling me as well. And on top of that, you have Beijing cracking down on the gambling sector to prevent the sort of capital outflow or capital flight from China via Macau, which is the only legal place to gamble in mainland China. That has really collapsed the revenue of the VIP gaming sector, which analysts say is possibly quite a permanent collapse. They are expecting the VIP gaming revenue to recover to only about 40% of pre-pandemic levels next year. So this city is embarking on this ambition to really diversify the economy, to move towards being a hub for international tourism, but also for MICE, conferences, events, and also a hub for commerce, tech, and even expanding into traditional Chinese medicine as well.
So President Xi also there to participate in the inauguration of a new chief executive. What are we going to hear in his speech, particularly when it relates to the agenda for the city?
Yeah, well, a big part of Beijing's agenda is also to help Macau diversify its economy, which I talked about earlier, but it's also about increasing Macau's role to integrate with the Greater Bay Area, with Hong Kong, with southern China, and that's what President Xi will be talking about. He also earlier said at the gala dinner yesterday that Macau should not be complacent. It should continue to attract talent to the region and integrate with the national strategy to integrate with the other areas in southern China, for instance. And that presents both benefits and challenges because it also means that local businesses here will face stiff competition with businesses in, say, Zhuhai City, where tourists can get a wide array of goods for very good value for money. So this new incoming chief executive will have to tackle a lot of those issues related to people's livelihoods here in Macau.
All right, Bloomberg China correspondent Min Lo there in Macau. Let's take you live now to Washington, D.C. We have the House Speaker Mike Johnson there addressing members of the media. The House is due to begin voting on the GOP stopgap funding measure and the debt limit bill. This is a very much slimmed down bill from the 1,500 odd pages that was set to go to the House yesterday. Now, it could be a torturous passage through the House. It's going to require a 2/3 majority, which would mean significant Democratic support for the manoeuvre. It's probably not going to be reached, which means there's going to be another rule triggered. And then, of course, it's got the Senate to get through after that. So it could be a very late night in D.C., but Speaker Johnson there just concluding his remarks to the media as the House goes to begin voting on that bill. We have more ahead on the Asia trade. This is Bloomberg. Okay, we're taking you live again to D.C. No surprises here. The Republican Party was going to need significant Democratic support to get this across the line. 2/3 support of the House was going to be needed to get this revised funding bill through. Well, that's fallen short. It's not the end of the story. However, there will be a rule triggered to come back and have another go with a simple majority instead. But of course, after that, it heads to the Senate. So we're setting up for quite a long night there in D.C. But on the first attempt, that funding bill, unsurprisingly, lacked the votes to get through. Let's take a look at how US futures are tracking at the moment. It was an interesting day for US markets. They started with a pretty healthy rebound, but then gave up gains. But we're seeing S&P futures kind of flat right now, just barely a point higher. NASDAQ futures in that negative territory. Of course, we saw a rather hefty Fed-inspired sell-off on Thursday in Australia. It'll be Wednesday US time. Take a look at the dollar though. The dollar spot index continuing to show gains. Every other currency suffering as a result of that. The yen in particular, 157.54 at the moment. Pop Mart's shares in Hong Kong have meanwhile jumped 370% this year. Now, this has been partly fueled by consumers looking to get their hands on the firm's collectible dolls. Bloomberg's China correspondent Min Min Lo has more.
In this vending machine, small boxes are for sale. The contents are known to the young adults, shelling $8 to $20 a piece for one. In the boxes, you may find cute little monsters doing warrior poses and leg lifts. They're so popular that some shops have set a limit of one set per person. Why? The quest to get the elusive secret figurine, sometimes with only 1 in 120 odds. This is what is fueling the huge numbers of repeat purchases, more than 40% in China.
My first blind box. I can sort of understand why people might get a little bit obsessive, because if you get one of these mystery characters, you can actually flip them for 10 to 12 times the price in the second-hand market, so it's a little bit like gambling.
29-year-old Elston Du is a big fan of these toys, often spending a few hundred yuan to buy 2 to 3 blind boxes whenever he happens to pass by a store.
Pop Mart released new items every Friday, so we'd always go to the store every Friday during our lunch break. We'll see what we each got from the blind boxes and exchange with each other according to our preferences.
Young adults are shelling out hundreds of dollars to buy toys of seemingly no practical value. That doesn't seem to dovetail with the broadly weak consumer confidence in the mainland. But analysts say it is precisely the economic woes and bleak employment prospect that are driving this emotional buying trend.
Nearly 41% of consumers spend between 300 to 500 RMB a month on these toys, and about 28% spend 500 to 800. So it's a lot of people spending quite a bit of money. Emotionally, I feel good about buying toys, and I feel abundant, and a little bit of this gambling mechanism, it ultimately just taps into our psychology.
Pop Mart, the leading brand behind these blind boxes, is on track to make 11 billion yuan or $1.5 billion in sales this year. Its third quarter revenue was up around 120%, and its share prices year to date has gone up more than 3 times. Analysts say this is more than a short-term fad.
Blind boxes is a big category. It's not only about toys. There's also leftover food blind boxes. There is kind of a dating match blind boxes. I think the China phenomena is definitely pushing the boundaries of what blind boxes could be to the next level.
It might look like something ordinary with no value at all. It can't feed you, but for me, the emotional value it brings is very precious. You spend 69 yuan, and it gets you joy and good connections.
Min Min Lo, Bloomberg News.
Let's take a look at some of the stocks we're tracking after hours. FedEx performing very well, better by 8.25% there. The company signalling that it plans to spin off its freight division into a separately traded public company within the next 18 months. That freight unit worth about $30 billion. So FedEx shares rising there after hours. They're pulling back, though, from earlier 13% post-market gains. Nike also in focus, better by about 0.75% there, reporting second quarter earnings of $12.35 billion. That was down 8% from the prior 3 months, but those numbers were still a pretty decent beat on expectations. For more on Nike, let's bring in Bloomberg Intelligence senior US e-commerce and retail analyst Poonam Goyal. So, Poonam, what were the key takeaways from these numbers from Nike? The market responding reasonably well.
Yeah, so at the onset, the fiscal second quarter results were better than expectations on sales and margin, especially when it came to wholesale sales and sales in apparel. Those were both outperforming consensus expectations. Though, as we heard from management on the call, the expectations do get harder as we move into fiscal 2H for Nike. In fact, management now expects low double-digit declines in the fiscal third quarter, which is a step down from where we were in fiscal 2Q, and really shows that there's still a lot more work to be done.
All right, so in terms of the work to be done, what's the plan? What did we hear from the CEO?
Yeah, the plan is really first and foremost is to cut inventories. They have a lot of aged inventory still that they need to clear to make room for new product. And alongside that, they need to work on innovation. Product is still key. They're returning back to sports. They're focusing on product, but all that will take time. We're expecting to see a step in the right direction in fiscal 2026 when hopefully they have cleared inventories and brought them back in line with sales.
All right, Bloomberg Intelligence senior U.S. e-commerce and retail analyst Poonam Goyal there. We have more ahead on the Asia trade. This is Bloomberg. ARK Investment Management CEO Cathie Wood says deregulation will be a core focus of President-elect Donald Trump's second term as his administration looks to boost the U.S. economy. She told Bloomberg what she'll be watching for as Trump returns to the White House.
If you look at the performance of our funds since the election, they've far outpaced the market, outpaced the Mag 7 and so forth. So I think what the market is beginning to say is this administration is going to support innovative strategies, anything that will accelerate the growth, increase the productivity of our economy. Deregulation is going to be, we think, a very large part of that. Tax incentives, tax rate cuts as well. You mentioned perhaps the cutback in government spending programs. You know, in our mind, government spending, longer term, is taxation in one form or the other. It's got to be paid for with increased taxes now, increased taxes later, or basically through inflation, inflating away the debt. So we think that's going to be very positive, this drive towards increasing the efficiency of the government, which will then limit the kinds of tax increases we've seen over the last few years, and perhaps even continue to roll back taxes, leaving more for the private sector at the expense of sort of inefficiencies in the government sector.
So, Cathie, following on that, the president-elect has outlined a number of initiatives that he wants to put in place as soon as he is inaugurated on January 20th. Of the different proposals, the pro-growth items that he has on his to-do list, which do you think needs to be prioritized? Is it tax cuts? Is it immigration reform? Is it tariffs? Is it deregulation? Which of those things should be at the top?
Well, consider the source. So my answer might be different from President-elect Trump's answer. But in terms of turbocharging growth, I think if tax rates, if this administration is going to cut tax rates, the most important thing it has to do is make sure they're retroactive to January 1st of 2025. Because, and we learned this from the Reagan administration, if they defer or phase in tax cuts, businesses and individuals will wait for the lower tax rates, and that can weaken economic activity.
ARK Investment Management CEO Cathie Wood there speaking with our colleague Scarlett Fu. Well, let's take a look at cryptocurrency. This, of course, is one of the areas that incoming President Trump said that he was going to deregulate, also establish a strategic Bitcoin reserve. We do see Bitcoin recovering somewhat, but it's executed an impressive slide, along with a lot of other assets, it must be said, since the Fed meeting, currently just above or just below 98,000. So Bitcoin slumped quite heavily post that Federal Reserve decision. Other crypto tokens, however, fell even more. Higher rates, of course, do tend to weigh on riskier assets, but that said, Bitcoin is still up around 45% since the November election. Let's get the latest now from the corporate front. Real estate mogul and former owner of the Los Angeles Dodgers, Frank McCourt, is making a bid to buy TikTok, and that's despite ByteDance's reluctance to sell. He told Bloomberg he spoke with more than 60 elected officials and policymakers about his bid. The court also held talks with members of President-elect Donald Trump's transition team to make his case for a possible deal. Sources say he's also recruiting a possible CEO. Among the candidates, the former TikTok Chief Operating Officer V. Pappas. Citadel Securities is making structural changes to its sales operations, aligning products across equities and fixed income to mimic the likes of other Wall Street heavyweights. The firm has created a new group led by Goldman veteran Av Bavsar to provide insights and product offerings. Citadel Securities is also hiring new talent to expand its business in Europe. BlackRock says it's writing down the value of one of its flagship renewable funds after two key investments for the vehicle collapsed. The firm is enlisting executives from its recently acquired Global Infrastructure Partners business to help turn around performance. BlackRock's Global Renewable Power Fund 3's net internal rate of return dropped to negative 0.3% from 11.5% in the previous quarter. Boeing has won an order valued at $36 billion from low-cost Turkish airline Pegasus for 100 737 jets, with options for another 100. Now, this marks a strategic reversal for Pegasus, which had previously preferred Airbus. The deal is also a win for Boeing, of course, after its recent challenges, including a prolonged strike and a near-catastrophic accident. Right, let's take a look at how markets are doing. We've been open here in Australia for a little under an hour. Not a great day. We did see the ASX slide 1.7% on Thursday, and that slide continuing today, down 0.9% at the moment. Got market opening, of course, in Japan and Korea at the top of the hour. Nikkei futures also currently in negative territory. The Nikkei was one of the better performing markets yesterday. We did have CPI numbers out of Japan a short time ago for the month of November, coming in pretty much bang in line with estimates. We've got a really weak yen though, 157.65. So we're on intervention watch from the Ministry of Finance once again. S&P futures, you see, they're pretty much flat after another down day for US markets. Market opens in Seoul and Tokyo up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, focused on inflation data surprising to the upside in Japan. And of course, we are awaiting that Fed's preferred gauge of inflation as well. All of this, though, perhaps complicated a little bit, Paul, by the fact that the House of Representatives in the U.S. has just failed to pass that stopgap funding and debt limit bill, which means the funding is going to run out Friday night. What that means really for that government shutdown and just government operations and the broader market impact, of course, is what we're watching.
Yeah, not the end of the line for that bill. It just means its progress is going to be slightly more tortured. It's probably going to be back on the floor pretty soon, probably under new rules that require just a simple majority to get it done. But yeah, we'll wait and see, Shery.
Yeah, it's really that broader outlook when it comes to budgets around the world that has really reeled markets this year, right? We're talking about France, the U.S., Korea, now Japan as well. I mean, that stimulus package, perhaps one of the reasons that we saw the BOJ potentially really not moving this time around, not wanting to raise borrowing costs in this environment. But the Nikkei right now opening 0.4% higher after already 5 sessions of losses, the longest losing streak that we've seen in Japan since September. The yen continues to be pressured. We're past that 157 level, with Governor Ueda also sort of casting doubt on a potential rate hike in January, despite the fact that, as I mentioned earlier, we did get that November core CPI surprising to the upside with growth of 2.7% year on year, and really the first time in 3 months that the key inflation gauge has strengthened. Take a look at how the Kospi is coming online, because we are seeing significant pressure in the South Korean market, with the Korean won also continuing to weaken towards that 1450 level, and the Kospi down 0.25%. We have seen the Korean won still around 2009 lows. Authorities really pledging to take further steps to stabilize the market, given the political turmoil happening in South Korea as well. But it seems investors still lacking the confidence to go back into the markets, Paul.
Let's take a look at how we're tracking here in Australia. Short answer, not well. We were off 1.7% yesterday, and we're off nearly 1% now on the ASX. One stock we're watching is Wesfarmers. This is a very diversified conglomerate. That's off by about 1.8% at the moment. We heard from Wesfarmers earlier it's going to seek the sale of Coregas to a Nippon Sanso unit for 770 million Aussie dollars. Take a look at the Aussie dollar as well. That's somewhat softer against the greenback. Everything is somewhat weaker against the greenback at the moment. And we've got yields in both Australia and New Zealand, the curve steepening as well, much as we've seen in the US. Concern over US debt supply, sticky inflation prompting a very similar move in treasuries. Got an oil price as well that's looking quite soft. That's slipping also as a stronger US dollar weighs, Shery.
Paul, let's bring in Jasmine Duan, Senior Investment Strategist at RBC Wealth Management Asia. Jasmine, great to have you with us. We have to start with this potential government shutdown in the U.S. I mean, the House failed to pass that bill, and we know the funding is running out on Friday night. There's always this political noise every time around government funding in Washington, right? So does this make any difference when it comes to assessing that market?
Well, we think this will inevitably increase the market volatility in the short term, especially after a Fed hawkish pivot 2 days ago. And we think after the U.S. election, investors have been focusing a lot on the positive side of the story, lower tax rate and loosened regulation. However, this time around, investors may need to focus more on the other side of the story, potentially more sticky inflation and also the debt issue in the U.S. And therefore, we think it's not surprising to see a 5 to 10% correction in the U.S. market in the near term. And investors have to be aware of the volatilities.
And yet, Jasmine, when I see your notes, you're still overweight U.S. equities. How is the U.S. relatively better than other markets when it comes to opportunities? And as you said, despite the fact that we may get more data showing sticky inflation, we have core PCE coming out.
Right. At RBC Wealth Management, we still have an overweight position in the U.S. equity. We think the U.S. is going to deliver decent GDP growth at around 2.3% next year. And also, if we look at corporate earnings, it is still growing at a very decent pace. And we expect S&P 500 EPS next year to be around $275 and based on our estimation, that will lead to an end of the year S&P 500 target at around 6,600. So at the moment, we think all the economic data are still holding up, and therefore we think any of the correction in the near term will be buying opportunities, and we will be looking for opportunities to add our positioning in financial, tech-oriented, and also utility sectors.
Jasmine, I know you also think the Fed is going to cut again in January. I'm just wondering if you could explain that a little more to us, because we had very strong third quarter GDP numbers today. Jobs are strong. Inflation certainly not tamed yet. You could probably make an argument that yesterday's cut wasn't necessary. At least one Fed member seemed to think so. So what's your thinking here?
Right now, we think investors should really be focusing more on why there is a Fed pivot instead of what it is doing. So the Fed has been long saying they are data dependent, but since January, we think most of the Fed rate cuts are predetermined, and now they are really turning data dependent. So if we look at the data, inflation is looking more sticky, and also the GDP growth is relatively strong. Therefore, we think a Fed rate cut pause is actually warranted. And now we are seeing the yield curve steepening again, but this is because investors, the long-term yield is picking up again, and investors are pricing in a more solid economic fundamental instead of economic recession risk. Therefore, we think the fundamental of the U.S. economy and the U.S. equity is still quite solid, and therefore it supports our view of maintaining an overweight in the U.S. equity market next year.
You also like gold in this environment. Do you have a price target for 2025, and what are the risks to this outlook?
For gold, right now, our base case scenario is for year-end next year is going to reach 28,000, and for our bull case scenario is going to reach 29,000. And we think the major central banks, especially the emerging market central banks buying, for example, China and India, are very important driving factor for this continuous rally. And ever since the Russian-Ukraine conflict, the central banks have been diversifying their currency reserve, and we don't see this trend stopping, and therefore we see continuous supporting factor for gold prices going into next year.
Jasmine, a central bank that's facing big challenges, the Bank of Japan, of course, and we continue to see that yen weakness past 157. When will it become too hard for Governor Ueda to continue pausing this rate tightening cycle, and what does that mean for the markets?
Right. Right now at RBC Wealth Management, we still don't rule out a possibility of a potential rate hike in January next year. But however, the Bank of Japan, their tone is becoming more ambiguous. They are now debating whether to hike in January or March next year. And they're saying they want to see more wage negotiation and also more information coming from the new U.S. Trump administration. However, it takes time to see the full picture. And therefore, if their tone is turning more dovish, we may see the yen continue to weaken. But the Bank of Japan and also the Japanese government, they don't want the yen to be too weak, and they may have to intervene if the yen depreciate too fast. And therefore, we still see the yen trading between 150 and to 160 against the US dollar next year.
But how much is there that the central banks around Asia can do when the Fed continues to be very gradual in its easing cycle? The Korean won at a 2009 low. The offshore yuan also falling to new lows. We've seen a little bit of a rebound because the PBOC ramped up support. But is that going to be the ongoing narrative in 2025 when we continue to see pressure for Asian FX?
The strong U.S. dollar is going to put pressure on the emerging market currencies next year. And for example, for the export, especially for the export-oriented countries, Japan and Korea, and not to mention China. So China, the PBOC recently have been trying to restrain the U.S. dollar and CNY upside by its daily offshore fixing. However, the wide yield gap, the rate spread between the U.S. dollar and CNY is actually a tailwind for the yuan next year. And it is hard to change in the near term, especially when the PBOC said it is going to continue to ease its monetary policy. And therefore, we do see the CNY hitting the 7.3 to 7.35 circle high in the first quarter of next year. And all the emerging market currencies are likely to face similar pressure coming from a strong U.S. dollar.
All right, Jasmine Duan, Senior Investment Strategist at RBC Wealth Management Asia. Thank you for joining us today. We have more ahead on the Asia trade. This is Bloomberg. Chinese President Xi Jinping is in Macau to mark the 25th anniversary of the territory's handover to China. He's set to attend the inauguration ceremony of the city's new administration. Our China correspondent Min Min Lo is there in Lotus Square and joins us now. So, Min Min, what's the mood?
Yeah, we're a few minutes walk away from Lotus Square. We can't get right in front of the place because police asked us to move away. Security is very tight here. The flag raising ceremony was just over. We heard the national anthem playing, and it's a very momentous occasion for Chinese people because when I came 2 hours before the flag raising ceremony began, there were people who traveled all the way from Shenzhen, Guangdong. They either came in late last night or early this morning. One of them told me he couldn't sleep last night. He was so excited to be in the same city where President Xi is visiting. So a very historic occasion. President Xi came here 5 years ago during the 20th anniversary. Now it's the 25th anniversary of the handover. And again, he is lauding the success of that one country, two systems model with Macau characteristics, saying that Macau is the pearl on the palm of the motherland, and really in some ways contrasting to Hong Kong, where 5 years ago it was roiled by those anti-government protests. And in contrast, Macau has been this bastion of stability, harmony, and President Xi is expected to make a speech later this morning. We expect him to continue to highlight the strength of that one country, two systems model, and perhaps also mention again that these territories are part of China's sovereignty and shouldn't be meddled with by other external third parties.
Macau's economy depends heavily on mainland visitors, right? And yet, with the economy sluggish in mainland China, not to mention, of course, the ongoing corruption, excess crackdown that we've seen from the government, how is Macau dealing with that now?
Yeah, and you can feel it when I was speaking to just local people, small businesses. They're saying that while you get the tourists coming in, they're not willing to spend as much as before, as you said, because of the broader lackluster economy in mainland China. And many of the tourists spending money here are mainlanders. And as you said, the crackdown on the gambling sector that has seen some junket operators being imprisoned, that really dealt a heavy blow to the VIP gambling segment. And our Bloomberg intelligence analysts are saying that next year they are projecting the VIP gaming sector to return to only about 40% of pre-pandemic levels, although the broader mass gaming sector is expected to recover to over 110% of pre-pandemic levels. But again, this shows both the strength and the weakness of the Macau economy because it's so heavily reliant on the casino revenue for driving about 80% of its tax revenue. So Beijing has been urging for this city to really diversify the economy, and you can tell based on President Xi's itinerary, he visited a university, a lab for traditional Chinese medicine, and a space technology lab as well, and that really signifies some of the priorities. Beijing wanting this place to diversify into traditional Chinese medicine, to be a tech and commerce hub, and to be an international destination for MICE events as well.
President Xi will be making a speech at the inauguration of the new chief executive. Can we expect him to fill in a few more details around this agenda for Macau?
Yeah, I think it will still be around the themes that I highlighted earlier, diversifying the economy, integrating further into mainland China, into the Greater Bay Area with southern China and Hong Kong as well. And we know the new chief executive will be carrying on the agenda from the previous chief executive. He has previously warned against what he calls the barbaric or the wild expansion of the gaming sector and said that being over-reliant on the sector means that young people have limited career choices. He's coming from, he's a former judge, the first chief executive in Macau to not come from a business background, and some analysts say this could mean the declining influence of the business circle here and a greater priority given to Beijing's policy agenda. So we expect him to continue to take on Beijing's agenda to diversify the economy and tackle some of the issues related to people's livelihoods.
Min Min Lo there, our Bloomberg China correspondent joining us from Macau. And there are some other political stories that we're following as well. Bloomberg has learned Canadian Prime Minister Justin Trudeau will shuffle his cabinet on Friday. It comes after the surprise resignation of his former finance minister, Chrystia Freeland, earlier this week. A government official says Dominic LeBlanc, who was sworn in as finance minister after Freeland quit, will remain in the role. Philippine Vice President Sara Duterte is facing a third impeachment complaint, this time from a group which includes clergy members and lawyers who allege she violated the Constitution and betrayed public trust. Duterte faces separate impeachment moves and an investigation over her apparent threat against President Ferdinand Marcos Jr. Argentina is seeking a new program with the International Monetary Fund to replace its current $44 billion deal. The IMF had earlier lauded President Javier Milei's government for cutting spending and cooling inflation. If an agreement is reached, it would mark Argentina's 23rd program with the IMF since 1958. U.S. Secretary of State Antony Blinken says Washington is receiving positive signs from the rebel group that swept Bashar al-Assad from power in Syria. He tells Bloomberg the U.S. is considering sending officials to the country to help aid in a smooth political transition.
We're looking at all the authorities we have. We're looking at all of the sanctions, not only our own. The United Nations has sanctions on HTS, its leader, and I think what we need to see is actual concrete steps, building an inclusive, non-sectarian government, a transition, eventually getting to an election. As we see these steps taken, then I think we'll be able to respond. Others will be able to respond. That's what we'd like to do. But we need to see concrete action, not simply positive declarations.
The EU's chief diplomat has said she's sending a senior representative to Damascus to talk to this new group, talk to this government. Is that something that you would want to do, that you can do, indeed, given the terrorist designation and the sanctions that are in place?
We've actually been in direct contact with HTS.
On the ground?
I can just tell you we've been in direct contact, and we're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days.
Pull back and ask you another question about the region, and there's been a lot of speculation that a ceasefire deal could come together. When President Biden spoke about the deal between Israel and Hezbollah, he was asked at the end, do you think you can get a ceasefire deal by the end of your tenure? He said he's hoping and praying. Is there anything that's happened that gives more grounds for hope and prayer going forward here? There is, and the reality is we should logically be able to get this. And I say that with all the caution that comes with that statement, because, you know, we've been very close before, and we've had these Lucy in the football moments where you're just ready to kick the football and Lucy pulls it away. But what's changed is this. Hamas knows that the cavalry is not coming to the rescue. For months and months and months, it hoped it would get a wider war with Hezbollah, with Iran, with Iranian-aligned groups coming in and creating more problems from Israel on more fronts, and helping Hamas endure. We now know that's not happening. They know it's not happening because of the very important work that was done with us and with others, dealing with the unprecedented Iranian attacks on Israel, dealing with Hezbollah. So I think that's concentrated minds among Hamas on the need to complete this deal. Having said that, you know, it's always incredibly fraught, and it's very hard to get decisions made. It's hard to communicate. And for all of those reasons, even as close as it is, you know, it can still move in the other direction. But we've all been fanning out, working with all of the different partners who can make a difference and who may have some leverage with, communications with Hamas, whether it's Qatar, whether it's Egypt, whether it's Turkey, where I was just last week. The fundamental question right now is Hamas finally prepared to say yes? And if it does, we get the hostages back. We get a ceasefire. That's U.S. Secretary of State Antony Blinken speaking with Bloomberg's David Gura there.
Let's take a quick check-in on how commodities are tracking. We've got WTI heading lower at the moment, 69.08 now a barrel. Oil slipping partly as a function of that much stronger US dollar. China's biggest oil refiner also saying gasoline demand in the nation has likely peaked. We've got iron ore, meanwhile, holding on just above that $100 level. This is not terrific news for Australia, obviously. We've got a lot of weakness on the local index today, off by 1% now. The materials sector off by about 0.8%, and government report showing that Australia's revenue from resources and energy exports expected to fall 10% through to June 2025. Copper prices weaker as well. We have more ahead on the Asia trade. This is Bloomberg.
Yeah, and the latest on that government shutdown in the U.S., the U.S. House has failed to pass that measure that would extend government funding into March. And we're seeing the reaction from Senate Majority Leader Chuck Schumer coming out saying that they need to go back to that bipartisan stopgap agreement that they have. Remember, President Trump pressured GOP lawmakers to abandon that earlier bipartisan agreement even before he's taking office. He's still the president-elect, but they actually need Democratic support to pass this. And some Democrats have already denounced the deal as a ploy to advance Trump's tax agenda. While the government funding that they have right now will lapse Friday night without congressional action. So we will continue to watch the latest incremental developments when it comes to funding in the U.S. But take a look at how U.S. futures are trading at the moment. We're seeing downside pressure of 0.2% for S&P futures after modest losses that we already saw in the New York session. Of course, we're watching the Treasury space very closely as well as yields continue to rise, with the 10-year yield topping and getting close to that 460 level that we've last seen in May ahead of the Fed's preferred gauge of inflation. Core PCE inflation likely to cool down in the month of November, Paul.
All right, let's take a look at how U.S. Treasuries are tracking at the moment. We have seen the yield curve steepening following that Fed decision. We've got the 10-year now at 454.81, and this is a trend that we've seen reflected here in Australia and New Zealand as well, that curve steepening. And we've got a very strong dollar. The dollar spot index continuing to rise for a second day. It's having a fairly profound effect on the yen as well, which has softened to 157.74. We'll be keeping our ear out for a possible intervention rhetoric from the Ministry of Finance. A couple of other stocks that we're watching after hours, Nike and FedEx. Nike now slipping into negative territory after hours. It was modestly higher there. The company did report revenue, profit and gross margin that passed analyst estimates. FedEx, meanwhile, continuing to surge, better by 8%. It's off some of the session highs, though, planning to spin off its freight division into a separate publicly traded company within the next 18 months. That unit valued at $30 billion. All right, we have more in a moment. This is Bloomberg.
Japan's key inflation gauge strengthened for the first time in 3 months after the BOJ held rates steady. Bloomberg economy and government editor Paul Jackson joins us now with the latest. And Paul, inflation data is coming out strong, but Governor Ueda yesterday seemed to even push rate hikes even further out into 2025.
Yeah, you could ask, what is going on? I mean, this inflation figure you saw today, 2.7%, I mean, that looks like a kind of no-brainer for raising interest rates. So why didn't he move yesterday? It's a good question. I think there's a lot of political instability in Japan. We've got a minority government trying to force through kind of budget proposals and tax changes. It's having to deal with opposition party. It's a minority government. We've seen how much trouble there's been around the world with minority governments trying to get budgets through.
Yeah, Korea, France, US.
Exactly. So, there's good reason for caution on the part of policymakers. Also, I think there was a kind of historic significance of raising interest rates 3 times in 1 year. Hasn't happened since 1989. And that's the year that the Bank of Japan was partly blamed for bursting Japan's asset bubble. So would you want to go down in history if you kind of gone too early as the governor that raised interest rates in the same way when they burst the bubble?
But politicians can change the rhetoric really quickly, right? At what point, with the yen now nearing 158, do they come back and be like, what households are suffering, like the yen is too weak?
Yeah, I think that the exchange rate is a key factor now going to be in play for when the BOJ moves. I think we saw in the press conference yesterday, Ueda clearly opened up the option of going in possibly March or in January. So what will be the motives for going in January? January's a bit complicated, isn't it? Because we've got Donald Trump coming in. We've got a whole
just
raft
4 days after.
That's right. The whole raft of new policies probably going to be coming in. There's a lot of uncertainties around that. But at the same time, do you want to wait until March if the exchange rate is getting weaker and weaker? I think if we're close to 160 around that January meeting, I think it's going to look a lot better to move then than lean on the government to intervene again.
Paul, part of the reason this faster inflation was a winding down of energy subsidies from the government, but there's some interesting dynamics at play at the energy market, right? I mean, we've got nuclear power plants coming back online and a much, much weaker oil price. So how could this impact the inflation numbers going forward?
Well, the inflation numbers going forward are going to be distorted once again by Japan's own government, because these subsidies that are being wound down are going to be wound up again. So we're going to see a stronger inflation figure next month, well, for the month of December. So when they head into that January meeting, I think the inflation is going to be at kind of near-term high. So if you're actually in the central bank and you're wanting to raise interest rates, there is an argument that January is actually best timing, because by the time you get to March, it could be like weakening again.
But even better timing could have just been this week. According to analysts and economists I was speaking to yesterday, Sayuri Shirai, of course, a former BOJ board member, Jesper Kohl, a longtime Japan watcher, but they were saying, why not move now? Why not send that signal that's clear, get ahead of potentially any changes in U.S. policy, get ahead of so many different variables that could happen in January, even with the political wrangling here in the country?
I think if you look at our most recent Bloomberg poll of economists, we had about 84%, certainly over 80% of economists saying December was the right time. It was clearly enough information available for it to warrant a rate hike. But I think the reasons I mentioned to you before, the political reasons, because one of the parties that the Prime Minister Ishiba's dealing with, they're a bit reluctant to have a rate hike before March. And also that historic factor of the 3 rate hikes in 1989, I think, weighed in on the decision and led to the reticence to go early.
We'll just continue to watch those BOJ communications. And Paul Jackson here with the latest on the BOJ, Bloomberg Economy and Government editor. But take a look at how the broader currency markets are trading. I mean, we talked about the weakness of the Japanese yen, but interestingly, we actually saw the Mexican peso shrug off losses after the central bank, Banxico, delivered the 4th consecutive rate cut there. We also had the Bank of England moving, of course, overnight. They kept their borrowing costs unchanged at 4.75%, and we saw the downside pressure on the pound. They're still seeing potentially 2 quarter-point reductions, according to money markets, after 3 of the 9 members of the policy committee called for a cut at this meeting. But let's continue to get the outlook on the currency space, especially on the weakness of the Japanese yen, with Bloomberg's FX and rate strategist David Finnerty. David, so more weakness for the yen, and when can we actually see a rebound? Because it's not just about BOJ policy, right? It's about what's happening with the Fed as well.
Yeah, no, exactly. Between the Fed, I think a lot of traders, if I'm honest, given the moves in the yen, would be quite happy to watch the Denver Broncos game today in the NFL, because the moves have been quite sharp, and basically there's no perception that they'll actually end anytime soon. I mean, basically you said with the Fed's hawkish rhetoric coupled with the BOJ's basically dovish rhetoric, you had a lot of hedge funds yesterday putting bets, particularly digital bets, that the dollar yen would have 160 to 165 range actually in the next 6 to 8 weeks. So the market is definitely suddenly turned its sentiment. Before, the market was quietly going, look, we'll trade euro short, we'll trade CNH short as well, but they didn't really dabble that much in dollar yen. But now it's definitely back in the forefront. It's become a popular play because it seems like it is going in one direction. I think the key thing going forward, obviously, is that certainly as it approaches the 160 area, is the potential intervention area. Does the MOF rhetoric start picking up? If it doesn't, then the traders will say, well, okay, we'll just push it higher, because the traders are a bit like a bear. They like, the kids, they like to poke the bear and see how far they can get away with it. So with lots of bets set in the 160, 165 area, then they're certainly very bullish on dollar yen in the near term.
David, we had, of course, that hawkish cut that many are calling the Fed move yesterday, maybe a dovish hold from the Bank of England. What impact have we seen on the pound? Where are we heading from here?
Yeah, it was interesting because going into the BOE's decision, the employment data was very strong this week. So markets were understandably dialing back the rate cut expectations. Even though just a couple of weeks ago, Governor Bailey came out and said, look, 4 rate cuts next year is feasible. So the market's thinking, well, actually, that's not going to happen. They're not going to maintain that rhetoric. But actually, they surprised the market by it did. So what happened? 2 things. You had 3 people actually voting for a rate cut. Normally, it's just one, Swati Dahingra. But actually, she was joined by 2 other members, one being Dave Ramsden. And then the other thing came out is Governor Bailey said, look, rate cut expectations for potential a rate cut in February aren't that far removed. So the idea of 4 rate cuts next year is still on the table. Now, the markets have only priced in 2. So if they end up pricing in more, should the data weaken, then obviously that's negative for sterling. And you saw sterling weakened yesterday on that dovish rhetoric, which was unexpected. So going forward, it looks like at the moment, dollar's benefiting 2 things. It's benefiting from a stronger or more hawkish Fed, shall we say, but it's also benefiting from ECB sounding a bit dovish, the sterling sounding dovish, and the BOJ sounding dovish. And remember, those 3 currencies, the euro, yen, and sterling, are the 3 main currencies that make up either the dollar index or the Bloomberg dollar index. So if they're actually weakening, then the dollar by default will strengthen. So at the moment, it's understandable to see why everyone's very bullish on the dollar going into year end.
Are there any risks to that positioning, or is 2025 just narrative going to be dollar supremacy, exceptionalism, and what could be some of the catalysts that could change that?
Yeah, I think there's obviously risks to it. If you look at market pricing right now, the pricing basically 1.5 cuts all of next year. Now, that's on the assumption that Trump will come in, impose tariffs, etc., etc. Now, the reality is, will that in reality happen? If it doesn't, then obviously suddenly you go, well, the worst case scenario that I expected hasn't happened, and therefore markets go, actually, I could be a bit more dovish than anticipated, which should be dollar negative. Also, again, from the other currency side of the equation, does the data come in stronger, certainly with the Eurozone, which a lot of hedge funds are certainly short the Euro. But again, if that Eurozone data somehow surprised to the upside, you see some of those positions unwound. Again, so that would weigh on the dollar. I think the near term, the biggest interesting thing that could impact the dollar is actually the funding bill that's coming out. The Republicans have the majority in the House, but they haven't been able to pass this funding bill to basically prevent a government shutdown. Now, that is an indication of the problems that the government may have next year. It is assumed that Republicans will take everything, that everything will just be passed nice and smoothly, all legislation. The reality is that is not the case. And this is a good example of what will happen. So I think going forward, the question is, how much can get passed of Trump's legislature. Basically, you'll hear a lot of things called budget reconciliation next year. That's one way to pass it. You'll hear filibuster, which is the way Democrats will try and block his legislation in the Senate. So at the end of the day, the question is, the perception is it's all going to be Trump will just do whatever he wants, the reality may not be quite as simple as that. And I think that day, if that comes in, then the worst case scenario that the market's expecting may not materialise, and that may impact the dollar's dominance.
All right, our FX and rate strategist David Finnerty there. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how these two stocks are trading at the moment, because, of course, we had seen news that Sony is increasing its stake in Kadokawa to 10%. We are not seeing trading as of yet, but Kadokawa right now is indicated down to the daily limit, in fact, while Sony is gaining ground. Bloomberg Intelligence now thinking that Sony could expand content sales for games, animes, and movies by increasing its stake in Kadokawa, and collaboration could create more than 5,000 new intellectual property a year and could be adding value to Sony. Let's discuss this whole gaming industry and the broader sector as well. Our stocks reporter Alice French joins us now for the outlook for this sector. Sony shares reaching a new high this month already. What's driving all this hype around gaming?
Absolutely. So, yeah, Sony is up to its all-time high this year. And like you say, we've had this Kadokawa news last night, which is also a positive for them as they try to expand their kind of IP and anime-related business. So the gaming sector in general, as you say, is having a bit of a moment, not just in Japan, but kind of worldwide. In 2025, we're going to see some pretty big releases. We've got Grand Theft Auto 6 coming out. Sony's also releasing some of its own names, including Ghost of Yote, which is part of a very popular series. And so this is kind of driving a lot of optimism for the sector in general for next year. But also within the context of tech in general, you know, there's obviously a lot of worries about things like trade risks, geopolitical risks as Trump comes into office in January. And so there are some moves among investors away from kind of hardware plays within the tech sector. So we're talking about, you know, chips and things, more towards software. So gaming is obviously a big part of that, just because it is more insulated, and, you know, it's quite difficult for a government to throw kind of restrictions on gaming. So they're seen as being kind of a safer bet for tech investors in 2025.
Yeah, that's been the interesting call for the narrative in 2025, go from hardware to software. Does that mean that the likes of peers like Nintendo could be doing better? How does Sony performance compare?
Yeah, absolutely. So we're seeing Nintendo up quite a bit as well. We've seen other Japanese names like Bandai Namco, Capcom as well, Konami as well, doing pretty well this year and expected to extend next year too. Sony, as a stock, it still trades relatively cheaply, though, compared to those peers, both in Japan and also compared to Microsoft, its main kind of US rival. And so, you know, analysts or investors are kind of saying that it still has further to rise in 2025. And yeah, there is quite a lot of hype around it, but it doesn't seem to be overhyped just yet.
So, yeah, a lot of hype, but are there any risks to gaming stocks next year, Alice? It can't surely all be good news.
Yeah, I mean, obviously, you know, there is an element of, I suppose, unpredictability to the gaming market. You know, a lot of people saying, you know, that GTA 6, for example, will be very well received. I'm sure it will be. Nintendo also set to release its Switch 2 next year, but we don't have the dates for that yet. There is always a risk that, you know, games could do less well than predicted. Obviously, also for Japanese companies in particular, we do have the currency. Of course, the yen is very weak today, but there's always possibilities that it could strengthen next year. And while, you know, Sony and Nintendo, obviously, they do have a big software business, Sony in particular as well, you know, it does also make chips, it does also make other tech products. And so it will be sensitive to those currency changes. And that could be a potential downside risk.
All right, stocks reporter Alice French there in Tokyo. Turning now to AI. After bursting onto the scene just 2 years ago, OpenAI's ChatGPT and its competitors have quickly become the dominant theme for the future of tech. But AI developers now find progress slowing amid growing questions over profitability. The Bloomberg Originals team takes a closer look.
It broke the internet overnight.
A new artificial intelligence tool is going viral.
It's called ChatGPT.
It can answer follow-up questions. It can admit its own mistakes.
When ChatGPT came out, it really quickly gained traction. You might ask it, write a poem about unicorns.
and it might spit out something that sounds just like it was written by someone. That really struck a chord with a lot of people. It also struck a chord with investors.
Tech companies and their investors have sunk billions of dollars into building AI systems with the bet that these tools will keep getting more sophisticated and one day prove wildly profitable.
There's this concept in AI that if you just sort of keep feeding an AI model more and more data and more compute power, that it will start to just sort of teach itself and become smarter and smarter.
But progress seems to be getting a little bit trickier for some of these big companies.
As expenses skyrocket, an industry known for moving fast and breaking stuff could be slowing down.
I think the progress is going to get harder. When I look at 25, the low-hanging fruit is gone.
They're trying to figure out, how do we make these models that are getting increasingly expensive, eating up increasing amounts of computing power, worth that trade-off, right? If you're not getting this incredible boost in performance, what do you do?
ChatGPT and AI systems like it work by using massive software engines called large language models, or LLMs.
A large language model is an AI system that's trained on lots of data sourced from the internet typically, and it can respond to written prompts with other amounts of text that sound really like they were written by a human.
To do this, these models use an algorithm to process the parameters of any given prompt, and this is how that unicorn poem comes into being.
For a while, these models have been getting better quickly, but right now, at least 3 of the top companies, OpenAI, Anthropic, and Google, are having issues training their models to the level where they would like them to be.
As we're spending more and more money, the engineering complexity of getting it right is increasing, and that's why companies need to be larger, need to have more talent.
It's hard to say if anyone's making money off of AI right now. We do know that OpenAI has quite a number of paying business customers, but we don't know how that breaks down in terms of like the exact number of companies that are paying for it or what kind of benefits these companies are actually seeing.
But it's not all about the money, is it? Let's keep in mind, OpenAI, for example, was established as a non-profit research company focused on advancing AI for the benefit of humanity. Of course, it plans on shifting to a for-profit model, but the timeline on that is unclear. And still, despite the wintry forecasts, the money keeps pouring in.
They have plenty of money at the moment, but it's not totally clear if companies are going to be using it long term, what kind of return they're getting on their investment.
Perhaps the most exciting thing for AI enthusiasts, and the most horrifying for its detractors, is the prospect of artificial general intelligence, or AGI. AGI would be a system that can reason and think like a human, applying its synthetic brain across disciplines, not just reacting to prompts with poems or six-fingered hands, but accomplishing complex tasks independent of us humans, and maybe even surpassing us. Could we one day be working for them?
No one exactly agrees on, when we're going to reach AGI or what exactly it will look like. A lot of people are predicting that it can come very quickly, right? You see other people saying it could take decades, it could take a century, it could even never happen. And something like some of these setbacks that we're seeing give people reason to maybe reassess or say, hey, this path to AGI may not be as simple as some wanted.
Let's get the latest from the corporate front. Real estate mogul and former owner of the Los Angeles Dodgers, Frank McCourt, is making a bid to buy TikTok, and that's despite ByteDance's reluctance to sell. He told Bloomberg he spoke with more than 60 elected officials and policymakers about his bid. McCourt also held talks with members of President-elect Donald Trump's transition team to make his case for a possible deal. Sources say he is also recruiting a possible CEO, including former TikTok Chief Operating Officer V. Pappas. Citadel Securities is making structural changes to its sales operations, aligning products across equities and fixed income to mimic the likes of other Wall Street heavyweights. The firm has created a new group, led by Goldman veteran Av Bavsar, to provide insights and product offerings. Citadel Securities is also hiring new talent to expand its business in Europe. BlackRock says it's writing down the value of one of its flagship renewable funds after two key investments for the vehicle collapsed. The firm is enlisting executives from its recently acquired Global Infrastructure Partners business to help turn around performance. BlackRock's Global Renewable Power Fund 3's net internal rate of return dropped to negative 0.3% from 11.5% in the previous quarter. Boeing has won an order valued at $36 billion from low-cost Turkish airline Pegasus for 100 737 jets, with options for another 100. This marks a strategic reversal for Pegasus, which had previously preferred Airbus. The deal's also a win for Boeing after its recent challenges, including a prolonged strike and a near-catastrophic accident.
Take a look at that downside pressure on the currencies across Asia right now. The Japanese yen continuing to weaken against the U.S. dollar after the Bank of Japan held rates steady. And right now we're hearing from the finance minister, Katsunobu Kato, speaking in Tokyo, that they're gravely concerned about FX moves, that they're seeing one-sided sudden moves, and that authorities will take appropriate action against these excessive moves. Of course, traders have been watching for potential more verbal intervention. Given the weakness of the yen, we had gotten some strong economic data. Again, the key inflation gauge strengthening for the first time in 3 months. But Governor Ueda signaled that they could potentially even hold in January has not been received well by those Japan yen watchers. And we're now seeing the continued downside pressure as the Korean won is also at a 2009 low against the U.S. dollar. A whole different story with the BOK also continuing to ease policy there, not to mention the political turmoil. A little bit more upside for the offshore yuan, as we're also seeing U.S. futures right now a little bit unchanged as we're potentially headed towards that government shutdown. This is Bloomberg.